Personally think indexation should be a birthright of an investor who is investing in conservative assets. I think the Indian household has funded the fiscal deficit of the country by lending money to government for years and decades. Now is the time to reward the household savings by giving them exemptions on the debt side and the equity side, is my belief. What is well needed in Indian investing space is simplified taxation. It's a four-dimensional matrix. How can taxation be so complex? Otherwise, CA should be mandatory education in India.
Hi, I'm Neha Vashisht Mahajan and welcome to a budget special episode of ET Smart Investor, where we'll be discussing about your investments and the union budget that is due next week. And to discuss more on this, we have Feroze Azeez with us. He's the Deputy CEO at Anand Rathi Wealth Limited. Thank you so much, Feroze, for taking out time and joining us today on ET Markets live stream.
Nice to be on your show, Neha.
So let's quickly start the session for today, and let's start with the budget. Budget is due next week. What are the broad expectations of the MF industries from this budget?
Yes, see, the broad expectations, an industry generally, every budget has an expectation. This is the maiden budget for the new, the third term of the NDA government. So, firstly, I think the exemption limit of long-term capital gains, which is 1 lakh rupee per person, has to now be revisited, because that's the number which we had from 2018 when long-term capital gain was introduced at 10%. So 1 lakh exemption has not seen any change for the last 6 years. I think that needs to be revised to 2 lakhs, which is logical given where the markets are, and valuations and inflation should be factored in that exemption limit. That's 1 to 2 lakhs. That's first. Second is the debt-linked saving schemes being introduced, by which I mean in the Section 80C, the only instrument which from the mutual fund industry gets that exemption under 80C is equity-linked saving schemes. Whereas post office schemes, EPF, PPF, all these get counted in 80C. So mutual fund industry is not just an equity platform, it's a debt platform as well. So debt-linked saving scheme should also be introduced, and that should help get an exemption in 80C 1.5 lakh limit. That's the second expectation. I think the third expectation is that specified long-term assets. See, when a person reinvests his sale proceeds in real estate, there is something called Section 54 and Section 54F, where there is an exemption on capital gain to promote real estate investments. I think India has promoted physical asset investment for long periods of time, ancestral. I think including in the specified long-term asset, a mutual fund infrastructure kind of an investment, and get us an exemption of 54 EC is a very important inclusion and a logical and the most reasonable expectation to my mind from the most transparent industry, which is the mutual fund in the collective investment scheme arena.
Right. So since we are talking about the mutual fund industry, let's talk about AMFI and its 16-point budget proposal that came out recently. So AMFI has proposed an amendment to remove arbitrage between fixed deposits and closed-ended debt mutual funds. So what is your stance on this?
You see, closed-ended debt mutual funds, fund of funds investing in more than 35% in equity are also, because they are fund of funds, get into the gamut of Section 50AA. What is the Section 50AA? Section 50AA was included in the budget last year in FY24, FY23. The Section 50AA says that any mutual fund which does not have more than 35% in equity will always remain a short-term asset, even if held for greater than 3 years. Now, fund of funds, especially, who actually invest more than 35% in equity, but they don't invest it directly in equity, they do it in the wire route in terms of an ETF or another mutual fund, are still getting under the gamut of 50AA, which is not fair. A fund of fund which is investing more than 35%, but not directly, but through another vehicle, should also be exempt from Section 50AA. That's, I think, the most important point. in the 16-point proposal from the MPs.
All right. So there is one more expectation that I was going through. It's coming from the banking sector, and SBI has actually said that the on the expectations on lines of FD having some same tax parity as mutual funds. So, what do you think this will be fair or not, and what are your thoughts on that?
See, I think FDs are at par with debt mutual funds after the inclusion of 50AA. In the
Hmm.
mutual fund industry, the number of investors in the debt side are very few.
Right.
Corporates, treasuries use debt funds. Individual investors use equity mutual fund as the large popular platform, not debt mutual fund. That's point one.
Hmm.
FDs are being used by the retail or the retailist of India. So debt mutual fund is ideally not competing with FDs. That's what the
Hmm.
banking system needs to understand. If there is a deposit growth in the banking system that is not coming, and I don't think the debt mutual fund industry is competing with the FDs
Right.
in the banking sector. That's point two I'm making. Point three, after the inclusion of Section 50AA, if Feroze bought debt funds today and
Hmm.
held it even for 10 years and sold it after 10 years, in the current tax regime, he will be paying 38 or 39% tax
Hmm.
if you are in the highest tax bracket in India.
Yeah.
So if that's not detrimental to debt mutual fund, I don't see a reason why the banking industry should lobby for further detriment for debt mutual funds. I think enough bad has been done from a taxation standpoint to bring
Yeah.
both these asset classes on parity.
Right. And to talk a little bit more about that, we know that the indexation benefit has gone from the debt mutual funds. So, in the AMFI's proposal, also, it was mentioned that there should be tax concession for debt mutual funds. And I just want to understand, do you think that government will get indexation back to the table?
I personally think indexation should be a birthright of an investor who is investing in conservative assets. I
Hmm.
think the Indian household has funded the fiscal deficit of the country by lending money to government for years and decades, right? The foreigners always invested in Indian equity, and unfortunately, Indian domestic households didn't invest in equity, but they
Yeah.
invested in the debt of Indian government. So, point I'm trying to make is when the country needed the borrowing the most to fund the fiscal
Hmm.
deficits of our country, the Indian households have supported. Now that we are included in the global bond index and $30 billion has
Hmm.
come or is expected to come in the next 1 year in the bond market of Indian debt, I personally think now is the time to reward the household savings by giving them exemptions on the
Hmm.
debt side and the equity side, is my belief.
Well, a very valid point you made. One more thing I would like to discuss with you before we close our session for today is that what do you think should be focused on when it comes to this budget for equity markets? Just a roundup. And what is that one thing that is well needed at this point?
I think one thing which let me go with the second question first. What is well needed in Indian investing
Hmm.
space is simplified taxation. It is
Yeah.
unbelievably complex. It's unbelievably complex. I reiterate, it's a four-dimensional matrix. STT, non-STT paid is different
Yeah.
taxation. Different asset has different taxation. Different time periods have different taxation. Different asset classes have different taxation. Now, this four-dimensional matrix to solve one thing, which is investments. A household with great difficulties in saving its money and investing. How can
Yeah.
taxation be so complex? Otherwise, CA should be mandatory education in India. So, simplification of taxation in the investment space is the need of the hour. And I personally believe this government has shown immense progress in simplicity, both on the direct tax and also in corporate tax. And I submit to the government and I wish and pray that investment
Hmm.
taxation can be simplified. That's the need of the hour. If Indians have 830 lakh crores is the Indian household savings, 830 lakh crores. If that has to be suitably invested by lay people, taxation has to be very, very simple across asset classes and time periods. or STT and non-STT. This simplification is the need of the hour. Now, coming to your first question, what can one expect out of equity markets? In my opinion, the budget is priced in. The budget is priced from a perspective that the budget will be good. So if the budget is good, the markets should sustain these levels because earnings are catching up beautifully. Quite a
Yeah.
few people are only very worried about the market levels, rightly so, because if Nifty is at 24,700, 800, those are very, very large prices optically. But the earnings have also caught up. Earnings estimate earning estimate for us in the beginning of the year was 960 rupees. I think we have ended at more than 1030, 1040 rupees for the last financial year. Earnings have also been more than expectation, 18-20% growth on Nifty earnings for the last 1 year. Tells me that if the budget is even good, the market will sustain. If the budget is lower than expectation, the markets could give a breather, especially given the fact that FIIs now are 80% long in index futures. Whenever
Yeah.
FIIs are long 80% or short 80%, the market tends to move the opposite direction. So, some word of caution, the budget has to be very good or good for the markets to sustain.
All right. Just to add one last point, which sectors do you think the mutual fund industry will be focused on post budget?
I personally think defense infrastructure is a little overdone. I think financial services, core financial services sector has valuations which are very, very reasonable at mean valuation. So I am betting, I would bet my money on financial services, largely in the banking space, both PSU and private sector.
All right. So we are here at the end of our session for today. Hoping for a positive change for the mutual fund industry and also like the overall budget as well. Thank you so much, Feroze, for joining us today on ET Markets